Hello friends, how are you? Welcome to the Elliott Wave Vision. So let's start today Indian stock analysis with the Nifty 50. So in Nifty 50 overall we are looking for the bullish move as a brown wave 1, brown wave 2, brown wave 3, 4. After this brown wave 4, we count the structure as a green wave 1, green wave 2, black wave 1 and black wave 2. We can count this move, this whole structure as a leading diagonal as a green wave 1. But we count the structure as a green wave 1, green wave 2, black wave 1 and black wave 2 like this. So as we discussed in our global indices video that Nifty ready to go towards the bullish side, we need to wait for the classic trading level pattern like this. Now market confirm the classic trading level pattern. Like at this point, market give us the arrival 26,500 the belongs to group 2, start of group 2. At this point, market touch this 26,500 give us the reaction. So we count the structure arrival, reaction, first high above level. Market cross is 26,500, first high above level. Now we need to wait in daily time frame A, B and C. Then we'll go towards the next point 27,200 and then 28,000 step by step with this wave B. With this wave B we can go towards the next point on 272 and 28 step by step. So we need to refine our entry in lower time frame, like we need to wait for the classic trading level pattern again in 1 hour time frame at 25,500 or 26,000 to refine our entry. So let's check the classic trading level pattern number 1. So in pattern number 1, at this point arrival market touch this 26,500 in Nifty 50, give us the arrival and then bounce back as a, B and C. We call this correction as a reaction. After this reaction, market crosses 26,500 and give us the first high above level. After this high, now we need to wait for this correction as a, B and C. Then we can go directly with this wave V towards the next impulsive move, or we need to refine our entry from this wave B to next impulsive move in lower time frame or its correction. Like we can go directly with this wave B towards the next point 272. But we need to refine our entry with next impulsive move and its correction to go towards the 26,500 and then 272 and then 28. So let's check the structure in 1 hour time frame. So in 1 hour time frame, after this black wave 1, we count the structure as a wave A, wave B, wave C, as a wave 1, wave 2, wave 3, wave 4 and wave 5. After this wave 5, market give us the clear sharp impulsive move as a wave 1, wave 2, wave 3, wave 4, wave 5. Market cross this wave B 26,500. 26,500 belongs to the start of group 2. At this point, market give us the arrival reaction. Now market cross this 26,500 and give us the first high above level. So we can go towards the bullish side directly with this wave B. We need to wait for this wave C to complete as a wave A, wave B and wave C. Then we can go directly with this wave B towards the bullish side towards the 26,500 and then 272. Or we need to wait for the impulsive move in 1 hour time frame or lower time frame, like impulsive move, arrival, reaction, first high above level A, B and C. Then we can go towards the 26,500 in lower time frame. We need to refine our entry. If we enter with this wave B, then we start our stop loss from this low. But if we enter after this impulsive move, and this classic trading level pattern in lower time frame at 26,000. Then we can start our stop loss at this point. Then we shift our stop from this point to this point step by step. So if we want to enter, we need to wait for the impulsive move and its correction to go towards the bullish side towards the 26,500. So let's check our next pair, Bank Nifty in daily time frame. So in Bank Nifty, as we discussed, this brown wave may still is in play. So we count this whole structure as after this black wave 2, we count this move as a 1, 2, 3, 4, 5 of brown wave 1 as a leading diagonal. After this leading diagonal, we count this structure as a green wave 1, green wave 2, black wave 1, black wave 2, and brown wave 1. At this point, market crossed this 60,000, the strong and larger number. Sometime market touch and bounce back, and sometime market cross and go towards the group 1. Group 1 belongs to the 61 and 62 and 63. So at this point, that's possible. Market go like 1, 2, 3, 4, 5 of brown wave 1. Then market go towards the bearish side as a correction wave A, wave B, and wave C. That's also possible. How we join the bearish or bullish move? At this point, 60,000, it's group 1. Group 1 belongs to the 565, 572, and 58. So we need to wait for the classic trading level pattern at group 1. Like we need to wait for the arrival, reaction, first low below level A, B, and C. Then we will go towards the next point 55 as a brown wave 2. Then market go towards the bullish side. Or that's also possible in lower time frame. We count this structure as a 1, 2, 3, 4, and 5 as a brown wave 1. That's also possible. So if this is the case, we need to wait for the classic trading level pattern at 62. 62 belongs to the group 1. Market already give us the arrival. Now we need to wait for the reaction. First high above level in lower time frame in 1 hour or in 15-minute time frame A, B, and C. Then we will go to 63, 64, and 65 step by step. So as of now, we are looking for this correction as a wave A, wave B, and wave C. Then we'll go towards the bullish side. So in lower time frame, if you want to join the bearish move, we need to wait for the classic trading level pattern at 58 to go towards the 55. If market give us the pattern at 62, 62 belongs to the group 1. Then we'll go towards the 65. So let's check our next pair, Reliance, in daily time frame. So in Reliance, after this black wave 4 and 5 of this brown wave is the 4 of this green wave 3. We count this structure as a flat pattern like wave A, B, C as a black wave A, black wave B. Now we are looking for this black wave C as a wave 1, wave 1, wave 2, wave 3, wave 4, and wave 5. Then we will go towards the bullish side. If market give us the classic trading level pattern above this 1600 larger number, if market cross this point, market already give us the arrival. If market give us the pattern above this 16,000 like first high above level A, B, and C, then we will shift our count towards the bullish side as a wave 1, wave 2, wave 1, wave 2, then we will go towards the wave 3. So as of now, we are looking for the bearish side. Market give us this move as a wave 1. Now we need to wait for the classic trading level pattern at 1300 and it's group 1. Group 1 belongs to the 1310, 1320, and 1330. At this point, market give us the arrival at wave B. we need to respect the trading levels and the Elliott wave as a wave A, wave B and wave C. At this point wave B. If market give us the classic trading level pattern at wave B, then we can go towards the next point with this wave B. Market not touch this 1300. 1300 belongs to the group 1. But we can go with this wave B towards the next point. So at this point we can say market give us the arrival. So now we need to wait for A, B and C reaction, first low below level A, B and C. Then we'll go towards the 1200, 1100 and 1000 step by step. So if we want to join the bearish move, we need to wait for this classic trading level pattern. We need to wait for this correction A, B and C and next impulsive move. We can go with this wave B towards the bearish side, but we need to refine our entry and refine our stop loss with the next impulsive move and its correction to go towards the next point. So let's check our next pair, HDFC Bank in daily time frame. So in HDFC, we count this structure after this brown wave 2 as a black wave 1, black wave 2, 3, 4, 5 of this green wave 1. So after this green wave 1, we are looking for this correction towards the 800. 800 belongs to group 2, end of group 2. So at this point, we count this structure as a wave A, wave B and wave C, or wave A, wave B and wave C. After these A, B and C market give us W, X and Y. Now we are looking for this move as a black wave Y. If market give us the classic trading level pattern above this 1000, then we can shift our count as a green wave 2 at this point. Wave A, wave B and wave C as a green wave 2. If market give us the pattern above this 1000, like at this point market not touch this 1000. So now we need to wait for the arrival, a reaction, first high above level A, B and C. Then we will go towards the next point 1100. 1100 belongs to the group 1. So if market give us the classic trading level pattern at 1000, then we will go towards the next point. Otherwise, we are looking for the deep correction towards the 50 to 61 fib ratio. So market give us the W, A, B and C, X. So if we want to join the bearish move, we need to wait for the classic trading level pattern at 900. So market not touch this 900, but we can say the arrival, because sometime market cross the level and sometime market not touch and give us the reaction. So at this point market give us the arrival, a reaction. Now we need to wait for the first low below 900, first low below level as an impulsive move and its correction A, B and C. Then we will go towards the 800 with respect to the 850 and its group 1, 830, 820. So if market give us this pattern like arrival, reaction, first low below level A, B and C, then we will go towards the bearish side as a wave Y, wave A, wave B and wave C. So let's check our next pair, ICICI Bank. In this pair we count the structure after this strong impulsive move as a green wave 3. We are looking for this green wave 4 as a wave A, wave B and wave C towards the 38% towards the group 1, 1200. Then we will go towards the bullish side. So let's check the possibility. So we count this structure as a wave A, wave B and wave C. We need to wait for the classic trading level pattern at 1300. Market not touch this 1300, give us the bounce back. So we can go with the end of this wave A as a classic trading level pattern. So market give us this move as a wave A, wave B and wave C. If market give us the classic trading level pattern at 1500, if market give us this move as a arrival, a reaction, first high above level A, B and C, then we will go towards the next point 1600 and 1650. That's also possible. We count this structure as a wave A, B and C or W, X and Y as a wave 4. That's also possible. If this is the case, then we need to wait for the classic trading level pattern at 1500. Then we'll go towards the bullish side. So as of now, we are looking for this correction because it's impulsive move. After the strong impulsive move, market give us the correction as a sideways. So now we are looking for this correction as a wave A, wave B and wave C, or as a 1, 2, 3, 4 and 5. So if we want to join the bearish move, we need to wait for the pattern at the end of wave A, or we can go towards the bearish side at group 1. Group 1 of 1300 belongs to the 13, 10, 13, 20 and 13, 30. So if market give us the pattern like market give us the arrival, a reaction, first low below level A, B and C. Then we will go towards the bearish side towards the 1250 and 1200 step by step. So now we need to wait for the first low below level A, B and C. We need to remember the numbers: minor number, major number, medium number, 10, 20 and 30. 10, 1, 10, 100, 10,000, sorry, 1000, 10,000 belongs to the group 1, 1, 2 and 3. So like 1300, 1100, 1200, 1300 belongs to the group 1, and 13, 10, 13, 20 and 13, 30 belongs to the micro levels. So we can go towards the bearish side with this number as our arrival, reaction, first low below level A, B and C. So let's check our next pair, Infosys in daily time frame. So in this pair, after this green wave 1, market give us this move as a 1, 2, 3, 4, 5 black wave A. Then market give us this move as a wave A, wave B and wave C as a black wave B at 50 to 61% between this ratio, fib retracement ratio. So now we are looking for the bearish side at this point, the strong and medium number 1500. Now we need to wait for this 1500 to give us the classic trading level pattern. Then we will go towards the 1300 and then 1200. So now we need to wait for the arrival at this 1500 arrival, a reaction, first low below level A, B and C. Then we will go towards the 1300. If 1300 give us the pattern, then we will go towards the 1200 as a wave C. So if market give us the classic trading level pattern above this wave B at 1700, above 1700, then we will go towards the bullish side. Then we shift our count as a wave A, B, C or W, X, Y, 1, 2, 1 and 2. That's also possible. But this structure more look like the corrective pattern. So now we need to wait for the classic trading level pattern at 1500. So let's check our last pair, TCS in daily time frame. So in this pair, we count this structure after this black wave 3, market give us this move as an impulsive move 1, 2, 3, 4, wave 5 of brown wave A. Or we can count this whole structure as a corrective pattern like wave A, wave B, wave 1, wave 2, wave 3, wave 4, wave 5. Wave A, B and C we can count. If this is the case, we need to wait for the classic trading level pattern above 33. Then we'll go towards the 365. If this 365 give us the pattern, then we'll go towards the 4000. If 4000 give us the classic trading level pattern, then we will shift our count towards the bullish side. So as of now, we are looking for the bullish move towards the 4000 as a wave 1, wave 2 or as a wave A, wave B and wave C. Now we are looking for the bullish side. In both cases, bearish or bullish side. As a wave A, B and C or as a next move 1, 2 and 3. So at this point, market completed its wave A, then give us the impulsive move towards the 33. 300 belongs to the group 1. 33 market give us the arrival, a reaction as a B and C flat pattern. Now we need to wait for the first high above level and A, B and C. Then we'll go towards the next point 35, then 38 and then 4000. If 4000 give us the pattern, then we'll change our count towards the bullish side. So now we are looking for the bullish side as a wave B, wave A, wave B and wave C as a correction. Then market go towards the brown wave C. So this is for now. We will meet again tomorrow with the crypto pairs. Like, share and subscribe.